Hello. Hello. Hi, very good morning, Vijay. Hey, sorry, we started a bit late. I'll just share the link now. Um, yeah, there we go. Hey, hi, Kiran, very good morning. I think the camera angle is slightly different. Hi, very good morning. Calm mind. Sure. I think let's do a quick overview. Um, Maybe let's start off with Bank Nifty. Sorry, Bank Nifty. What we can expect is that uh, tomorrow being the expiry, it will try to erode as much as it can. And how they will do that is by moving with sudden spikes. In the sense, this consolidations will erode both the sides. It will erode, no doubts about that. Like P and C will erode with these sort of small range moves. What what really kills the premium is that suddenly there will be a spike till here, and the CE will be completely wiped off. Then they will gradually bring it up. Slowly they will bring it up, and then they will try to kill the PE premiums as well. So both the sides they will try to erode today, and then see, if you wait for right opportunities, probably around 5 to 6 opportunities you can get if you're looking for good entries. But quick scalps, there could be many, but then good entries like there is a comfortable intraday 15 minutes of positioning, or 30 minutes of positioning that you wanted to do, some 4 to 5 opportunities you can get today. So you see it, all this, if you observe, it's all like playing around this budget day low. So this is the budget day low, and how long it's been playing here, you see. So this is the final rung of support, and market has no reasons to go higher. Okay, market has no real reasons to go higher. There has been an inherent bearishness in the market. Hi Kaushik, very good morning. Hi Ravi Sai, very good morning. So we have a great set of range bound actions that can happen today. But if you're a writer, what you can do is comfortably you go ahead and then write 40k next week PE. Next week CE. You can go ahead and write that, and then 38,600 you can write off next week. That is April first week, 6th expiry. You can go ahead and then write that. And then collect the premium for the rest of the day. If what should be the stop loss? Keep if you have initiated, the moment it touches UT4, UT5, you should or yeah, UT5 is better. UT5, then we should consider exiting or adjusting. If you have good capital, then we can go on adjusting that position, not an issue at all. So that's the game plan. If you're a writer, go ahead and then write 40k and 38,500 or 600, whichever you are comfortable, that you can go ahead and then write. If you are a buyer, right, and you don't really know which side it will go, but you are willing to pay a little bit extra premium and take that risk, now is a perfect time. Now is a perfect time for you to initiate a strangle 40k CE and 39,500 PE. Both you can buy. Then wait for a breakout of about 1,000 points that can happen on or before 7th April, right? So that is for positional play. What's happening here? Oh, it is at 660. Okay. And intraday basis, hi Mariner, very good morning. Santoshi, Manakam, very good morning. Oh, your target achieved with the cap up. You have taken a C position yesterday. When I was taking, you also took. Oh, okay, that's great. Hey, Sunny, that's nice. Hi, Siddharth, very good morning. So, yeah, this is great. When there was this gap up, you were able to exit it in profit. That's wonderful. Um, right now, for intraday, what should we try? When the market reaches like 600 to 650, I said in the message, you can go ahead and then take PE position. There was a gap up. I think. Um, I think what was the high here? 563. That was the high, and from there itself it started reversing. Right. So these are good places to initiate PE positions, because any time that it enters into the zone area, you can comfortably go ahead and then take PE positions. Can we enter here? Absolutely up to us, because there is a gap that can be filled. Um, but what if it is filling like this? Very slowly it is coming down and then filling. Then it's not worth it, right? You have to initiate a position where the action has to be faster, right? You want that. And yeah, it's a game that we wanted to take a risk. We can take here. P position is also fine, but then I would be very comfortable if there was a 100 points higher we initiated. Market is stuck in a very tight range. It's get ready to blast. Yeah, it can blast either side. And remember, when we are stuck in a range for a very long time, any time that we are stuck in a range for a very long time, there is always 1,000 points breakout. Okay, to show you some examples, let's go back in time. See, this is all stuck here, right? Let's go back. You see, whenever the market consolidates, even if we go a bit, yeah. See, before any fall, you see, there is a range of consolidation. There is absolutely a range of consolidation. And then, oh, yeah. Then again, there is a range of consolidation. So this is all 15 minutes of thing. And there is another place where actually where it took support. You will see that there is a lovely range of consolidation here. And similarly, let's just make it small so that we have the complete picture. Yeah, you see this one, it's all consolidating before it breaks upside or downside. So anytime there is a breakout, there will be a band of consolidation before it moves. See this? Before this massive fall, how long it has been consolidating, you see? And this is really a long time, from Feb 6th to Feb 16th. So 10 days of consolidation around some 200-300 points range. But when it finally broke, it broke massively, right? So we are seeing one such pattern now. The market's been consolidating around this place since 20th of March. Sorry, 20th of March, and today we are here, right? Although it's not entirely disconsolidating here, it has gone up and then came down. Even if you consider from here, 24th to 28th, that's 4 days. Another 3-4 days, if it consolidates here, we can expect 1,000 points move. That's why I said worst case scenario there should be a breakout by April 7th or before. Right. So here is what I am proposing. You guys have PE position holding. If you guys are really holding the PE positions, and then you wanted to completely, not completely, I would say, like eliminate your risk by about say 80 percentage or 85 percentage, you can go ahead and then buy CE as well. Then strangle it. Why? Because I am not expecting you to hold. Let's say how this adjustment works. Okay, let's say how this adjustment works. Now I have taken CE somewhere here yesterday. Somewhere here I took. Right now it is at like 40 rupees profit or something. Okay. Now I will take a box to explain this. Let's say I am having 100 quantities of 39,500 P at a price of say 600. I think my average has come down, but let's take the market value just for your understanding. Okay, 663, right? Yeah, 663. My average is far lower than this. It must be somewhere around 500 and something, because I've done a lot of intraday things that brought it down. So let's simply keep it this way, even at market rate. Okay, and then now long term I am bearish, no doubts about that. But what if there is a move on the upside, right? Now 40,000 CE I am buying at say 660 rupees. Okay, just assuming. Now both of these are like 1,200, 1,300 points, I would say, right? Now we are not waiting for downside move of 1,000 points alone. Okay, there is a potential that it could go higher, right? If it goes higher, it might come back stronger as well, very quickly. But then, should I really miss out? Should I really miss out? If what if price reaches 39,800? Okay, let's assume, and then say that what if it reaches 40k, and what if it reaches 40,300 and 40,500? So if it reaches 40,500 straight away, no need to worry. This would have become almost like 1,300, this by itself would have become some 1,300, 1,400 rupees. Square this off, and then leave this position open for free, because your investment is retrieved in this 40,300 to 500 range itself. Okay, and trust me, if you want to know what would be the prices of this, just go to 38,500 CE and check what is the price, and that will be the price for when the market reaches 40,500, right? So you will be making good money when the market directly reaches here. Downside I'm not coming now, because downside is our natural thing. I'm just saying that what if it reaches here, worst case scenario, some big news, then we are making profits directly. Suppose there is no breakout on the upside, again some phase of consolidation, and then moving towards 40k, right? 40k means add another some 300 rupees to this, 900 rupees it has become, and this will become say 400 rupees. Okay, now 900 rupees this becomes, right? You close this. Now what happened is you have recovered 240 points, and then deduct this from here, 240 points, you reduce it from here, that becomes your actual price. And believe me, if you have some sort of writings of 100 quantities of say about 37,000 something around, no, last week it was around 200 rupees, now it is at 150 or something. Okay, now this had become how much? Let's say 37,000 is at 138 rupees. Okay, now it is at 130 rupees, but I initiated somewhere around that, let's say 138. Now when the market goes to say 39,800, what will happen is this will become say 100 rupees, this will become say 800 rupees, and this will become say 550 rupees, right? Now what happens, net to net you are still winning 100 rupees from this, 800 rupees is 900, 1450, you are winning in every possibility. So very rarely that if the market is staying at 39,500 itself for next 10 days, then you are going to have some problem, right? That's why I'm doing these adjustments. I hope I answered why these adjustments. Yeah, are you guys clear? So is it clear, guys? Any questions, feel free to ask. Yeah, okay, great. So which is why it is all very difficult to explain, right? Yesterday suddenly I said CE, buy CE at this place. I cannot give you all this explanation when the market is about to close, right? Because last moment we decided, I mean, hardly some 10 minutes was there, and quickly, like I said, okay, let's go for CE buy. And then only for Rato I said, only if you have good capital you do that, like that I said. So the reason is this, okay, because we can almost make if the market stays at one place, we can almost make sure that we are not losing money. That is why it is almost like a delta neutral strategy. Okay, that's what it is. Delta neutral strategy this is. I'm trying to eliminate all the biases that could happen. Oh, sorry. Was it so boring you dozed off? Oh, maybe you are in the US market you were watching, right? Yeah, yeah. So that, if you don't mind, may I ask, what's your age? Oh, 29. Yeah, I think it's important to save energy, but overall, I understand the interest to stay awake in both the markets, and then capitalizing it is great. But inherently, it affects later in the later parts of the life. Not later, not too far away, just another 4 or 5 years, things starts to show up, right? So. Choose your markets otherwise, or cap yourself, Going continuously without sleep is not a good time, a good thing. Okay, balance it out. My sincere request to you. Oh, this is in 15 minutes candle. Let's switch to 5 minutes so that we get more details. See, that's what I was saying, right? I didn't even wait for anything. I said even if it goes and fills the gap, it will be so slow that it's not worth taking a PE position. And exactly you see what's happening. It is going down, but it is not uh, like going in one clean go. Oh, oh, you, sorry, Santoshji, I cannot pass it on to you virtually. But looks like the trading is blocked due to PAN other link issue. You haven't linked it? Hey, hi Rajesh, welcome. I think you are here for the first time. Oh, you have linked. I see, I see. Santoshi, is there, I think I have done mine. Is there any way to find whether it is linked or not? Yeah, do let me know. I have to link for my mom, and it's been pending. What? Strange market. Okay. Let's add some. Oh, Santoshji's favorite band has been added. One moment. Yeah. Okay, I think the band can be hidden. Might. Always down. I'm doing it and yeah, I will add it. just just one quick thing is that first before I bring it, I wanted to have some sort of clarity on our trade plan. Then because too many lines it will come in between. So let's just define where we will enter. Once it fills the gap, if you are someone looking for a CE position, this is one area that I would suggest you to enter. Maybe here or this low of yesterday, right? You can use this for entering your CE. Okay, if for people trying to strangle the position, can enter C here, right? So if you are really looking for strangling your positions, this is a great entry point, okay? But it may happen, it may not happen. But if you want to really take a little bit more chance and then take it, maybe no, yeah, this should be good. This should be a good place to do. So it's up to you whether you want to enter here or here. It's up to you. But this is only for strangling, right? Then, of course, we have another fresh entries. So, yeah, here I think we already have this UT3. Maybe, yeah, this is fine. Add P positions, yeah. In between, no trade. You can comfortably go ahead and write positions. You can comfortably write positions. Like I said, go ahead and then write 40K and 39, 38, 600 or 500. You can comfortably write either of that. Now, it looks so pessimistic, right? Like, sir, in that case, should I not trade here? No, you should not be trading. Unless you are a writer, don't trade. Don't trade. It's not worth it. Okay? So, and it also doesn't mean that, market is open, doesn't mean that, I should have some positions. Only then, I'm a trader. No. Simply, learning to zero positions you take even after 1 hour of market opened, or even for the entire day you have not traded and simply watching. That's a great skill. It's not that shows your maturity, right? So a lot of people think that a market is open, I have to add profits and then show that I have done some great money. No, sometimes yesterday, do you think everybody would have made money? In fact, big players, I have seen the screenshots on Twitter, and a lot of people, they say that nobody was able to make money. As far as I saw, those people who have complained about yesterday's market on Twitter, nobody made money. I am not talking about very small people. They are people with big money. Okay, they themselves were not able to make money, right? So, if you are not losing, then that itself is a great reward for us, right? Oh, to link it costs 1,000 rupees, is it? I see. So, I think instead of, I think I will also do some writings, because there doesn't seem to be adding any. I think I will just quickly add some writing positions. Just wanted to open Sensible to check where the premiums are more, and the gamma effect has to be less. Sudden spike of 300 points should not affect our position. So like that we have to choose. I think this is good. I'll go ahead and then write this. This is good. Um, all right, done writing both the positions. Oh, hi Selvi, good morning. I linked it in, maybe it is late charge because of lockdowns. I always tend to forget a year. Oh, okay, I see. Seem to be in good mood. Yeah, I was just listening to a lot of music yesterday. So, uh, I really love to hum and relax. Uh, so, anyone wants to be trying writing? Anyone wants to write? Even paper trade for that matter. You can go ahead and then write April 6th, 39,300 and 38,300 and 40,500. So whether you want to do a paper trade, whether you want to actually try it, it's up to you. But why I am doing that? That is only to curb the losses that might come when the market is stuck between these two ranges. If the market is not breaking UT3 and then breaking this and consolidating only here, I want to collect the premium for the day, right? I will be losing my positions, right? I have both C and P. Whatever is the intraday premium decay that's going to happen, I'm collecting it from the far OTMs. So it's a win. That way it's a win. And if it is breaking out, I will exit. I will exit once that breakout confirmation happens. And when that breakout confirmation will happen, when it breaks UT4, UT5, I know that, okay, maybe it's going higher. I'll be watchful, right? Now, look at this move, guys. Look at this nice moves. So much of, red candle, this will wipe off all the gains that has happened, right? That's why it's going to erode a lot. It's going to completely destroy. So I'm not writing to capture that entire premium for the week. It is only that intraday whatever I am going to lose because it consolidates, I am trying to capture. The moment it breaks on either side, my positions I will square off from the other position that I wrote. So just like that, the position that I created is already giving me 550 rupees of profit. Just like that. Because of the strong move upside, P has been butchered. Um, 38,300 C sell and 40,500 no 38,300 P should be sold and 40,500 called to be sold. Okay, so do the paper trading. I sold the P at 110 and call at 105. Now the prices must have reversed because of that move. The moment it reaches here, I'm straight away going for P buy. The moment it reaches this UT3, I will, without thinking, I will add puts. Okay, whether right. So we are having this beautiful upside move. So remember, whenever any person says it's a no trade zone, right? It is actually the place where big players are writing off their positions, and because if they have written as an option buyer, you wanted movement, and that's when you make profit, right? If there is a place that there is no movement, and that means the presence of writer is more at that place. Okay, because for writers the movement is destroying. When it moves, it creates panic for the sellers. So as long as it stays, writers are happy. So a no trade zone for an option buyer is the perfect zone for an option seller. Okay. Okay, let's bring in the band. Now it's time, because we have discussed all the strategies. Now let's enjoy. Siddharth, Santosh and I will be enjoying this band now. Wow. See, I will not be suggest. If it is another day, I would have suggested you to enter here itself. But today, I will not suggest that, um, because the moves are going to be very very short range. If you enter here and if you capture it here, it's only 50 points, and in that 50 points, it will not even come down. Just in one straight line. It will just make a pause, go here, up, down, up, down, up, down, and then come here. It won't be a worth taking a full position for just 50 points, right? 50 points in the bank nifty is at least translates into say about 8 rupees or 10 rupees maximum. And if you are entering in market order, then probably you will get only 6 rupees or something like that. Not worth it. But a clean entry would be here. It enters here and then you are capturing here. That is about 100 points. You can easily get 25 points there. So uh, either we get it at where we want it or no trade at all. That's fine. Just enjoy the writing and then watch. Don't try anything. Okay. See, some days you are getting double the profits, right? Think that it is a day to compensate days like today. If you are an option buyer, you have done some day twice of your target or thrice of your target. And days like this are being paid in advance. View it that way. Which one, Siddharth? You're saying something? Bollinger Band non-repaint. So what do I do there? How do I bring that? Do I need to type in something, or I mean the guys who are joining the stream first time will go crazy looking at this now. See, this is why I said it's not worth. It came here till you're fast and then same candle it's returning. You wouldn't be earning much. No, it's not visible. I think some sort of policy restrictions or something like that. Oh, I see. Let me just check. Telegram. Oh. Let me try adding it here. This and see. Okay, I added this now. So, oh, this is you, I think. Chart. Okay, something you guys have done. I will remove the regular one. Whoa. It's really scary to see this zone itself. It's happening there. Which one is the band? Okay, I think this is the band, the 3 and this is 2. Upside color is not very clear. Is this the color? Blue? Oh, these blues are the colors. Okay, okay. Then what are in between? Moving averages, maybe? I don't know what are these colors. Maybe so many has come. It's confusing a bit. But I understand the blues are the extremes. That's fine. This can be saved and then I close this. Okay, remove the median lines also. Okay, sure. How do... Okay, maybe there is... kind of messy there. Okay, input style, basis lower, no, lower one is needed. Kind of confusing. What has to be removed from here? Basis 2. Tell me the things that I need to remove from here because it's your indicator. Lower and upper needed. What has to be removed? Lower 1, lower 2, upper 1, upper 2 needed. Basis. I think these two can be removed. Oh, remove everything and keep only the... Yeah, this is good. Oh wow, look at the fall, guys. This is a great opportunity for entering into the CE side. People who wanted to enter and can enter there. I would add some positions. The moment it reaches there, I will add some CE positions. So people who wanted to enter into CE, this is some nice opportunities. If you want to enter here, this is good. This is also a great place to enter. But then that is another 100 points away, right? But if you want to add some small quantities here and then take another quantity, that is also completely fine. I think, yeah, this is one place you can enter. Yeah, I entered at 620 on the CE side. Okay. Then how many points? 20 points I can capture from this, because on PE side I wanted 25, on CE side I want only 20 points, because it's against the trend, right? You don't have to wait too long in the trade that's going against our waves. So particularly in intraday, you don't want to maintain too long, and maybe I will place it into the system. 645, okay, let's go for it. What's there? Let's manage it in any way. So net positions. So 646 is my target. I have placed it into the system. 646. 620 I entered, and then 646 is the target. Anyone else took the position alongside? Now the C is all like beaten, right? So now if they come back here, again C will be regaining, but it will not regain to its original state, but P will be losing. So these sort of moves were the ones that are going to destroy. Today morning we were discussing there will be a lot of consolidation. Suddenly there will be a quick fall, and then again it will come back. So let's see. Oh, you are holding strangle, is it? Hi Vishwanathan, very good morning. Good to see you here. Been a while. I think last week we were not there, and yesterday you were not there, I believe. So 620 I have entered, and 646 is the target I have placed in my system. Let it go. It's going to be range bound today. So if you're a writer, I said you can go ahead and then write 40k and 39,600. Sorry, 38,600. Put and call both, because we are in a no trade zone, and here I have clearly said if the market reaches around UT3 levels, you can add PE position. If it's reaching here, you can consider adding CE position for strangling your puts. If you are already carrying an overnight put, once the market reaches here, you can consider taking a CE just to be playing on both the sides. This is safe entry to enter into CE, but those who wanted to take a bit of aggressive entries can go here. Guys, please go ahead and then hit the like buttons. Just help us in reaching more people. Just click on the like button. So returning now. So anyone entered along with me on 40,000 C? Because I don't think anyone entered. Just in case, if someone did, do let me know. I bought my writing. Oh, why is it that? I mean, I didn't understand what you have done there. Oh, Selvi has taken. That's cool. Selvi, I think now you must be seeing that it's already like at 6:30, and the bid is going at 6:34. So already like 10 rupees profit, right? And let's go for 646. Right? We will not change it. Let's try for this 26 points. 1 rupee for the brokerage, 25 points for us. Okay, let's do that. Yeah, 6:30 now, and you placed it at 6:45. Okay, sure. But it won't go in one clean, like straight away it will not go. It will ascend slowly like this, right? There will be some pullbacks going up, and so on. So again, it's coming back to 622. Turned red. Wow. First time see why after following your stream. Yeah, I think they have been always playing on the puts, and just we started entering into the CE side. That too based on the zones that we are entering. Otherwise, I wouldn't be recommending at all. Because one thing about calls is that it's not decaying. When there is a recovery, it just jumps back to its original value, almost original value, in no time. So it's more like acting as a futures. There is no direct association it has. So in a way that is good. Only thing is that we have to be really right in our entries, then it is really rewarding. There is less of erosion on the calls. When it is stagnant also, it doesn't erode much, but when it is going up, it really fires like anything. When it is going down, it goes, the premium disappears, but then when there is a small spike, it quickly reappears. So that's not the case with puts. At least for last 2-3 months of scenario, this is. Last 2-3 months, this is the scenario. So it went as low as 614 and right now it is at 626, right? That is the kind of recovery it shows. Just quickly it recovers the premiums. Oh, guys, just give me some 5 minutes. I'm not going to take much time. I will pick up some water bottle and maybe something to bite. Here itself, I will bring it. So I'm not going to sit and eat. I'm just going to bring something to the table here. Give me some 5 minutes max. I should be back. Okay, guys, I'm back, and the market hasn't moved anywhere. It's just made a long spike, and then it is trading near the zone, so it should reach the targets pretty soon. Um, so this candle again, if you see, it's replicating here, isn't it? See this? It's a real replication. Fall, there is a fall, then there is this long candle, and there is this long candle, and again a red, again it is painting here. Maybe we can see same thing repeating over here. How beautiful, right? See, look at it this way. It's all orders, right? You are placing an order, I am placing an order, millions of people are placing orders, right? But then the psychology remains the same. Look at this. The psychology remains the same at all the levels. Now, if you can see this happening here and can quickly read this, how much of advantage we can take, right? So let's see if there is a repetition. Let's check the third candle, if it is going to the same length as this or not. If it is repeating like 3-4 candles, then we can really take advantage of it. Look at the height it went from there, right? We can really take some advantage of that. Maybe we will give a update on this in our group. Possibly, people can observe it. And I'm not saying it's going to work the same way. We have some observations, and this can be shared actually. Here and here. Right, let's take a screenshot. Paint, put it here. Oh, I'm sorry. I think I muted it and sorry. I was saying, Lakshya has taken some positions, but yeah, I've given him some updates on Telegram. What a candle this has been. I was saying that it's the same candle. This one is a slightly tweaked version of this. Now you see, this was the long candle. This is the long candle. Then this one is absolutely same, and this one instead it went all the way down, and the very next candle it came all the way up, and this candle is now repeating here. So we are having a pattern repetition here. Definitely a pattern repetition here. So expecting it to go higher now. Wow, target achieved. Trust me, another 1.5 minutes is left, and this can become this large green candle. Potentially, this can become a large green candle. Um, but what we are seeing here is absolutely pattern repetition. Almost 75% to 85%. It is like indicating a pattern repetition. Um, we will observe. We will observe this. This is really good. Just confirm, guys. Are you guys able to hear me now? Not sure. Okay, that's great. That's great. Oh, great. Awesome, awesome. What about the channel that I suggested? So, uh, where have you suggested stuck between 270? So stuck between 39,662, 39,270s. Yeah, we are having a channel definitely. That's a band in which it is stuck, right? It is a really a big band it is stuck in. Um, but that's too large, right? It's not like It's how many points? Yeah. See, this is one problem which I have some sort of, there will be a time where I will just play YouTube videos, songs, and then listen. And yesterday what happened after our sessions, I was sitting here just in the bed, and then I was listening to songs for about 3-4 hours. I was listening songs and doing some readings and then playing with my kid and all. So a lot of music I heard, and then it keeps coming in loop. Some songs keeps coming in loop. So yeah. So 6:36 now. This is cool. Come on. We want this candle. We want this candle here. Perfect. Perfect. This one is spoiling now. But if you observe, the call premiums are not depreciating. It was at 634 and right now it is at 630. It's not going down. So that's a good sign. That's a good sign. We might have more up moves now. In fact, the premiums have just been at 634 now. So when it was here, it was at 634. Here also it's at 634. In fact, the CE premiums are gaining. And that's a good sign for momentum. Quickly, we have to read these things. These are the things that we should capture pretty fast and observe what's happening with the price. Now it's at 637. Wow, look at that, guys. Look at that move, right? $643, $644, $644.85. Wow, $645. I think Selvi must have got it booked. Selvi must have got it booked for sure. Yeah, mine also got executed. 646. Done. Target done, guys. Selvi, did you get it booked? Really good. Yeah, perfect. So 25 points. Right, that's pretty good. One trade, 25 points, done. 100 points is what we wanted per day, then 25% is the target, done. Now again in no trade zone, and my writing positions are doing well. Both the positions are doing well now. And anyone has written the positions that I mentioned in the morning, like 38 300, sorry, yeah, 38 300 and 40,500. What is the status of that now? Anyone doing paper trading or whatever? What's the status of that now? Vijay, did you take any position? Eric Peter Wilson, have you taken any trades? Oh, okay. Calm Mind has taken a paper trade. So that says couldn't find the price mentioned by you. See, this is what I mentioned. April contract. I am going to type in. Okay, 38 300 and 40,500. The price I took was 110 for PE and 105 for CE. This is selling. So this is a selling position. This is what I suggested. So what do you mean by you couldn't find? I think so. So so that maybe you have seen the call that should be at 1200 or something. So I was talking about the put. Put is at 110 rupees something, and this one was at 105. Zero on many strikes. I see. Okay. Maybe you were watching it wrongly. So these are only a variations. So if you look at the fall exists. This candle is repetitive, and here onwards some tweaking is done, but then it is ascending the same way it was ascending yesterday. So we might very well see the pattern repeating, but in a not so obvious manner, not so very obviously like exact same candles on both the sides. Could have some sort of different variations and forms, but eventually there is a possibility of it to take it up to this levels one more time and drag down. So we could see a varied form of this happening. So Siddharth, what is this blue line? I understand these are the band, no things, but what is this blue line? Um, I'm trying to understand. Is it a median or something? Oh, adapted RSI. I see. Oh, blue is bullish. I see. Ah, I see. Interesting. Oh, that's why the same line turns into red and green, red and blue. Okay, I see. So we are seeing the same thing happening here. Only there is a twist with this long wick. That's all. I see. So green one is the average analysis is first to change according to trend line. Yeah, yeah, I see. I see. Nice, Siddharth. Very nice efforts. Good attempt. So how I will view my position is that I am holding my PE positions and then took 100 quantities somewhere here and then booked it here, right? So we got about 25 points. Now it's the same quantity as my positional trade, right? In positionally I'm holding 100 quantities of PE. Now this and 25 points I captured, right? So this will be, I will reduce it from my average. So if I am holding it at 600 average, 25 points I will reduce. 575 becomes my average. Then the more that I do and then capture it, yes, I'm making intraday profits, but I will not be withdrawing them. What I will do is instead I will leave it and with an assumption that this belongs to that PE and make sure that the PE is free of cost, right? Once the PE has become free of cost, you can play along like anything. Once the position that you're holding becomes free of cost, that's when you should try doubling your profits. There are many ways to do that. Now this one here, and this are almost same. Okay, only thing is that the height could be slightly lower, but then almost same. And we are not here taking any positions here, right? We will play only when it reaches, when it reaches either this extremes that we are talking about or either this extreme. We are not going to play in between. In between, if you have capital, do the writing that I suggested in the morning. Friends, I just wanted to check. Okay, I will answer that mine. I wanted to check if you guys are just being on the PE side, holding positionally, or are you guys also taking some sort of writings to manage, or buying some CE like I suggested. What is that you're doing? Are you purely directional on the downside, or are you uh, keeping in mind that there could be a possible upside moves as well in coming days? Just that it's very important how you process this. Okay, so C is OTM, so it will not appreciate much. No, not like that. We are playing in month-end contract, right? Month-end contracts have a different ways of appreciation. Even 41,000 C will appreciate. Okay, but the appreciation may be a little slow, but not that it will not appreciate at all. Plus, we are going with 40k CE because look at the premiums of CE and PE at the money, right? At the money, PE is lesser than CE, which indicates that there is already a natural premium appreciation on the CE side. So you don't want to really invest double quantities on the same prices, right? I mean, 1 second. So you may not have the same levels of uh, sorry, once again, the C is more on the ATM, right? The prices of C is more on the ATM, and the P is lesser. That itself is a proof that there is a natural tendency for C is to appreciate much faster. One. Second thing is that 40,000 C, say for example, if the market moves up by 100 points, probably the CE side will lose about 60 points, correct? And the PE side, PE side will lose about 60 points. CE side will give you say about 50 points. Okay. Now, if you have not taken any edges, what you are losing is straight away 60 points, correct? At least you are getting back some 50 points, right? And then there are a couple of things you can do. Either you wait for the reversal points. We know that the market would reverse as soon as it enters into this zone, right? So if you are holding a CE position, let the market reach here, you exit the CE, and as the market comes back, you buy it again. You see what I mean? You're capturing close to about 100 points, and then reducing your PE position's burden. The burden on the PE is reduced by 100 points, right? That's what I am doing for 2 weeks that I am doing this. I was able to get something that I purchased with 700 when I initiated the position, PE position, which I initiated at 700. My average became as low as 350 rupees something. Okay, that much I was able to do it, and because there was a training program, I couldn't play actively, but otherwise I would have made real deal out of it. But what I did was I closed that position entirely and then switched to ITM PE, because that time I was holding 39,000 PE. Now I am holding 39,500 PE, right? So since those profits were booked, I shifted my position to ITM. You see, so it is beneficial. Only thing is that you have to be very smart in doing all the calculations and then making that adjustments faster, all those things. So that uh, it's not like that. It's not like that. It's reversing from 39,400 to 300 levels for 2 days. Doesn't mean that it is, the trend is changing. Just go back in time, whenever there was 1,000 points fall, you see what has happened. Just, you see what has happened there. You will not believe, market looked exactly like it's in uptrend. That's how it looked. So position, see, look at this. It from here it fell and then it had a quick bounce back, and this is almost like, wait, this is not a good example. Let me switch to higher time frame so that we have full view of things. Not here. This is the zone I wanted you to watch. Now look at this market. This is the place. Market came here, it went up, and then this acted as support. Now it came here and then it bounced back. Now what will you say? Between 41,800 to 900, it is bouncing back. It's not a real zone, right? It bounced back. Again it came here and again it went up. Again it came here, again it went up. 4 times it has come to this band. Now if you see, you will go on to say that this is a reversal point, and then no, I don't think market is going any further down. But what happened was that, you see this, yes, it went higher, right? It went higher, but then when it came to this level, it didn't even wait. It just fell. It just fell from there. Without any break, it fell, right? So sometimes it's all like trapping people positionally and then taking it where it is supposed to go. So that's what we are seeing there, right? So we cannot really judge and say that, this is the end of bear run. Now bulls are in control. No, we cannot say that. And there is a strong move on the upside now, which is good, because now we can see that the pattern is really replicating, right? This pattern is really replicating here. 664. So I'll give you one example for people who are like Jatan, I think. Jatan, right? A Calm Mind. Yeah. So Calm Mind asked how I can take advantage of this. Now I am holding a call position from yesterday, somewhere around this level. Let it reach this zone again. All right. When it reaches here, yesterday there were so many rejections here. Do you think today it will just fly up? Yesterday, when bulls have full control, then only it got rejected. Today, if it enters here, do you think they will be able to take it without any pause? Of course not, because this is a zone. It has to be fought and then cleared. It cannot be cleared just like that. So the moment it comes here, again I expect it to come down. So what I will do is, when it reaches here, I will close my call position. So 635 I have purchased. If it is becoming, say, 700, 750, whatever, 750, 800, I'll exit here. Now 635 minus 800 means how many points? 145 points I am capturing. Sorry, 165 points I am capturing. Now this 165 points I will subtract from my put purchase. Say that I have purchased it at 700, 135 rupees, 165 rupees if I am subtracting, then what is my buy price there, right? 535. So my average has come down to 535. That's how I would like to see it. And again, if the market comes here, buy it again, buy the CE again. Again, if it goes up, sell it again. Multiple times you do this, so that at one point the put becomes free of cost. And if there is a big news, 1000 points breakout on any side, then we are still winning. So any case that we are winning, okay, almost any case. That's the beauty of this. And remember, I didn't buy C any other day. When I am buying this, when I feel that the momentum is gone and then it's going to consolidate, that's when I am entering. In fact, when the stream started, this is the first time I am suggesting C buy. Right, in last yesterday only I suggested. Other than that, I am always on the PE side. Hope I was able to answer and clear those things. For this expiry. Okay, I see. Yeah. So you may be asking, right? Like if the pattern is repeating and then you know that it's going to go here, why did you exit at 646 itself, right? See, these are possibilities and probabilities, right? We are expecting that could happen. If it happens, that's great. If it doesn't happen, then and it continues to go down in one stroke, then I would have missed it, right? So I'm taking 25 points, but for this opportunity that I missed, I will not worry, because once it reaches here, I will exit my positional CE and take a PE position. So what will happen? I am booking my call and initiating a fresh put, and then when it comes down, I buy that put for the intraday, and then I will initiate another call. So many things that I will do, that eventually whatever I would have got in one stroke, I have made more than that. So that's why capture 25 points. Suspend your capital for a brief time and get some major chunk out of it, then putting it into the market to give you full, right? Just it should be like like waving the hand. You just show that I have money, and then you picked up, and then you came out, and then you put the money in your pocket. Again, when there is opportunity, show that you have money, take it, and then put it in your pocket. Don't leave the money in the market. Okay, that's the trick. Currently it is at 670. Wow, guys. Yeah. Yeah, you're most welcome, Carmine. Now the trick is to predict what would be the price when it reaches here, right? Say that 700, we can keep it, because morning it went to 705 as high. Maybe 700 it will touch, okay? So for my positional CE, I can place 700 rupees, right, as my target. And then when it reaches here, what is the low of put that I want for the strike? Here the market was trading, right? So it would have made some low. PE would have made some low. What is that price? And then put a buy order here. Both will get executed at the same time. One, the CE gets executed. Second, the PE gets executed. And when it comes down, you are able to maximize. Now, this requires a very strong conviction in what you analyzed. if it goes wrong, and then if it goes up, what will happen, right? What if it is further going up? Then you feel that I have missed my CE, I could have made more profits, then unnecessarily I have entered into the PE, and then that is giving me loss. All these thoughts will come, right? But it may happen once in a while, but 90% of the times it will happen in as per our analysis only. So we should trust our analysis and then go ahead. Only then there will be a sensible money that we can make. Cup and handle, cup and handle. The only thing is the handle is this side and cup is this side. I would see when you have this sort of patterns, right? Don't think it as cup and handle. Rather view it as double bottom, right? This is one bottom, this is one bottom, double bottom. It's going up. Any which ways, if you want a bullish confirmation, look at this. Here there is a bottom. Here there is a bottom. Same length. Double bottom it has made and it's going up, right? And the length of it you measure from here to here and then extrapolate it from here to here. So what is that price target that you can expect? Let's draw it here. From this bottom to here is about 146 points. Let's drag it up and then bring it to this point. Yeah, this is where the breakout. So we can expect, see this, such a beauty, right? We can expect it to reach here, 630. Confusing? Is it confusing, Siddharth? What's your confusion? Let me try to clarify. See, double bottom. This is a okay. I will draw and show you. Maybe we'll take one line, horizontal ray. So here you see that it has taken the support, this particular point. I will make it red so that you can see. Yeah, so this is where it has taken the support, right? The base is touching here, the base is touching here, from where the market reversed. So this is a double bottom, right? And this is only a spike, and then the next day itself there was a gap up. So you can ignore these two candles. So if I consider this as the base, double bottom has been formed. When the double bottom is formed, where is it all like intersecting? See this, the top is intersecting here, this, everywhere. So here is where it got completed. The double bottom has completed, or a W pattern is completed here. Whichever, all W pattern, double bottom are all bullish indicators. Now I have to measure the target. How do I measure the target? I go here, take the base of this, go to the neckline of it, just extrapolate it, keep it here on the neckline. Sorry, on the neckline, yeah. Now that gives me the target. So I can expect it to go till here. Is it clear now? No, cup and handle. Okay, I will make a video on that. Cup and handle will be like, I'll show you. There are only two types of cup and handle. See, cup and handle. Okay, so this would be the neckline. So you will have a cup and an handle, right? This looks like a cup. Now, inverted cup and inverted handle, right? So this is another version. Now the pattern that you are suggesting is handle is this side and cup is this side. Okay, this is not a pattern. This is not a cup and handle pattern. The cup and handle pattern is the cup should be here and the handle should be here. The cup should be here and the handle should be here for inverted. This one is unnecessarily we are forcefully fitting it into a cup and handle format. Rather, look at another pattern that's far more relevant here. That is double bottom. Double bottom, it looks like a perfect double bottom to me. Why should I, forcefully say that this is a cup and handle when it is not? Theoretically, it's not a cup and handle, okay? But definitely it is a double bottom. Or I would even say that it's a W pattern, right? So this is a definitive double bottom. Hope that explains. Yeah. All right. Okay. Cool. Yeah. Great, Siddharth. But the beauty of our analysis here is that, when the market was here, somewhere here only, we had anticipated that this could be a pattern repetition. And what a beauty that is, right? So, how many candles before we predicted? You see this. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So 13 into 5, almost like 1 hour, 5 minutes ago, we predicted that there is a possibility that it could be a possible repetition. And almost it's going in sync with that, right? So that is something we should be happy about than the money that we made. How quickly are we reading the patterns? How quickly are we creating a game plan if things happen? Multiple scenarios you visualize, create some game plan. Intraday basis, positionally. The faster that you are able to devise a strategy and then make money out of it, there lies the success. Okay. Now maybe what I will do is, if there is any sort of short covering rally and then the price is reaching 700, I will not be able to execute it, right? So what I will do is I will go ahead and then place an order in the system saying that I wanted to exit this at 700. So if there is any sudden spike and 700 gets triggered, mine will be the first order or one of the first orders to get executed, right? So that's one. Second thing is that I am holding 39,500 put. What was the low? 637, correct? 637 is the low. What? Oh, the puts didn't depreciate in the morning or what? So when it reaches here, maybe I can keep it even lower then. Maybe 595 I will place it. 595. I will buy a put at 595. If it reaches there, I will buy. So this is 595. 50, 60 rupees lower I am buying. So on one side I want to exit 50 rupees profit, and another side I want to buy 60 rupees lower. This is great. If all happens, then that's wonderful.
Okay, puts have taken support also. The charts showing sophisticated patterns this expiry. I see. Uh, Unfortunately, I cannot check the strikes and their thing here in trading view, but I trust Siddharth's analysis. So, oh, okay. Oh, I see. I see. But Siddharth, one problem is there with drawing on strikes. The problem is when the time decay happens, the chart tends to react little weird than the spot or futures, right? So it's better you draw on spot or futures than to draw on. Uh, your analysis will be flawed to a large extent as the time decay happens. For example, if you're drawing a you know chart on tomorrow expiry, there will be decay, and decay will be like so fast, it will not give you the real picture. But if you are drawing on next month and strike, then you can get some reliability. But always the strike analysis are a bit flawed. Whew. Oh, just a moment. So I'm going to take a break. Um, just have my breakfast and also just give me some 15 minutes time. I should be back. Maybe worst case I should be back by 12:25 or something like that. Okay. So and I have already placed my orders. It's going to continue that way, and I will come back and check after some time, right? So cool, guys. I'll be back soon. Hey guys, I'm back. Quickly let me know if I'm audible. Okay, great. Thanks a lot, Siddharth, for the confirmation. So it's been trading in this band for some time, and yeah, possible upside moves we can expect till here, the target that we have drawn. Let's wait for that, and if that happens, that's wonderful. So the writings have already given about 1600 rupees. So that's some recovery of the range bound action, right? Like it's stuck here in the zone for some time, and we initiated it like only about an hour or 1.5 hours back, and already giving like 1500 rupees. That's a good return. Uh, and possibly they will stay in this, and then considering tomorrow to be the expiry, we can anticipate more erosion today, and the second half will be like supreme erosion happening. Very fast erosions will happen in the second half, so have to be mindful of that. See, 80% of the times the writings are easy if you just follow the FASP levels. Look at the T7 extremes on both the sides, and then start writing off, for the intraday. Maybe 100 points plus or minus, you can go ahead and then write the strikes. That will be good rewarding. So that's one way of earning on a regular basis. Other options are like waiting for the breakout trades, and here we are not finding any breakout, so obviously no need to enter anything. So these are the days that you can clearly avoid, unless otherwise you get some entries at the zones that we have drawn. We should not be trading otherwise. So just watch, observe, learn, look for patterns and things like that. Oh wow, inverse head and shoulder is formed, guys. just watch this. This is the base. Then this. Then this. We have an inverse hidden pattern formed in 5 minutes. So obviously the targets are same from here to here, and it's a completion of inverse and the hidden shoulder pattern. Maybe we can post this in the group. Probably I will increase the darkness of this pattern. Yeah, now this we can give as a target to our team members. Maybe they can plan their trade. So post it in the group as well, so people who cannot join the stream can look at that and plan their trades. So double bottom, cup and handle if you call it, or if you want to call it W pattern, all are giving the same levels of target. So this is fine. This is a good possibility. Removing this. So obviously we are not going to get into the CE side because the prices are higher, right? 660 rupees, why do you want to pay and then buy? If something goes wrong, we are on the losing side, right? Rather, what you can do is let the breakout happen and then reach here, then you can take a PE position because the target is achieved, then it should reverse. Considering that it got so many rejections at UT4 level yesterday, we can expect the same thing to happen. Maybe instead of getting into the call side here, we can enter into the put side here. That's something I would advise. If you're not carrying any calls, then that's what I would advise. If you're carrying the call, then you can keep this as target and exit and take a PE position and then collect it again once it enters into the yellow zone. So double profits you can make. People who initiated strangle this like a week back would be making good money because market is here for almost a week. So people who initiated strangle can make some good money here. Short straddle or short strangle would be more rewarding. All right. Iron butterfly narrow range would have been pretty profitable. True that, Siddharth. Thing is that iron butterfly is, yes, low risk and high return, but only thing is that we never know that it is going to stay here, right? So straddle is something like, giving you broad scope and give you a consistent range. For iron butterfly, if it is staying only in that 100 rupees range, then you earn. But short strangle or short straddle will give you range, very big range, and then you are able to make money in most of the cases. So risk to reward is much better in short straddle and short strangle than iron butterfly with you know typical range limitations. Um, yeah. Anyway, I think they are eroding the premiums on both the sides pretty nicely. Uh, what is the net position? Let's check that out. So yeah, 1,600 rupees profit from the strangle that we have created, short strangle. Okay, let me. So if stop loss hits one of the legs, then is it okay to keep running the profitable leg? No, see, edging positions don't work that way. A lot of people mistakenly, take things like, okay, one of the leg is giving me loss, let me close it and let the other one. But what if the market reverses from that and then you will lose the profitable leg as well, right? So that's called an adjustment. What is an adjustment? When you have initiated a position, maybe a short strangle or a short straddle, I will just go further here and then draw somewhere here where there is space. Yeah, this is empty space. I will draw here. Here we can draw. For example, let's say you are initiating a short strangle, right? Now this would be the short strangle, right? Now, as long as market is trading within this range, you have no problem. In fact, if it is close to expiry and then trading here also is not a problem, because tomorrow, suppose you have initiated this last week, okay, and let's say, let's say this was the strangle that you have initiated. The premiums were like about, say, 150 rupees here, and then here again some 150 rupees. Okay, now 300 rupees of coverage you will have on the downside and the upside. That's okay. Now the market was trading here, and if it expires within this range, you collect this entire 150 and 150, totally 300 rupees you are making, and then this is absolutely yours. For example, you initiated this one and then last week say that it moved here. Now, of course, this would have already become like, say, only 20 rupees or something like this, and this would have become, say, 300 or something. Now you are in a loss, correct? Now this is a big concern. That's why we go for adjustments. Adjustments are, once it reaches here, we can adjust this position and try to extend this range further. Maybe there are different techniques of how to extend this further. It can give you some more leverage. Probably you are writing a call of say here, which is around 100 rupees. Okay, now you are getting a little bit extra coverage, maybe till here, right? Now the graph would look like this, and like this it will look. Some extra coverage will be there. Suppose the market moves further down, you might want to write something like another 100 points, things like this. And then it would further extend and then looks like this. So likewise you keep on expanding it and then try to get it like 4 adjustments. If you do, if you have capital for 4 adjustments, you should most likely be in profitable zone. But the risk is that 150 points is nothing in Bank Nifty. It can, if it has moved some 800 points, another 800 points means your loss will be too big, right? So it all depends on the zone, your analysis, till where it can go. All these things you need to compute and then take the position, right? So worst case scenario, what can be done? You can do some sort of calendar adjustments, in the sense, maybe instead of writing one more lot of call, you're holding April month, April month end contract put you have written, let's say it has come down here. Maybe you feel that there is market going to go further down, you want to really minimize and cut your losses, then possibly you can take weekly expiry. Some buys you can do, like say the market is at 38,000 here, 38,000, you can buy 38,000 P of current week expiry. Maybe that is trading at 100 rupees or 200 rupees. If there is any further fall, that will compensate. If it is recovering back, then that 100 rupees, that 200 rupees will become zero, but then you are able to recover almost like 500 points or something like that. That's another way to manage it. Many multiple ways are there, and really the adjustments are so many that I have planned for a course on straddle and strangle adjustments itself, like 1 year's subscription or something like that. But a couple of people are interested. They have asked me, what all you need to do is 1 year of support. Any sort of VIX movement, any sort of market movement, how do we adjust the positions, entering, exiting, doing the adjustments, and then sometimes we close the leg. Sometimes yes, this leg is closed because it has become 20, and then close it and then shift it closer here, like that. You have like almost 20 different types of adjustments are there, depending upon the market situation, where the market is trading, whether it is in accumulation or distribution zone, supply zone or demand zone, uh, whether it is playing by some sort of historical resistance and supports, and also EMAs. Many things are there that we consider before we initiate a straddle or strangle. And I have not taken any sort of strangle position in last 1 month, short straddles or short strangles, because I know it's going to be extremely volatile. And why to complicate when you can really make better returns with long positions than converting into a short positions? That's the reason. So let me check if there are any questions. Yeah, okay, so that has understood that. So anyone has any questions, feel free to ask. So the problem is that when some people must be having their positions, and then they are watching their positions closely, maybe there is theta decay, they are thinking about how to get out of this position, and probably that is taking their no attention. So that's okay, I can understand that. Looks like you are alone here. Although I see 18 people there, but I think everybody is just busy with their positions. Okay, how to select strike for month end expiry? My God, if you ask everything, then I will not be able to create a course out of it. Everything will be shared here only. But it's okay. What happens is that you look at the volatility, right? Each month has its volatility, right? Um, for example, March, April, May, June, these 4 months are extremely volatile. Okay, extremely volatile. You can expect close to 1,500 points of action. Yeah, so 1,500 points of action that you can expect. When you have such band of moves, now if you are writing a weekly position, 1,000 points moves means you will wipe off your capital. If you are going for 1 week later, then yes, there will be some loss. But if you are going for month-end contracts, then the risk is well managed because the option premiums are also high. So you will get a long coverage. So if you are, it all depends on your predictions, right? And then predictions in the sense your analysis, I would say. You analyze the market and determine how much it can move, possibly how much it can move. By April end, what is the range that you have set for Bank Nifty? Your analysis has to be good, and don't ask me how to analyze that, okay? Because then everything I am sharing here only, right? Now you define the band. On the upside, I am expecting market not to cross this. On the downside, market cannot breach this. That once you know that range, initiate a straddle or strangle. Simple. No, ITM, no point in writing ITM strikes. There is no point in writing ITM strikes, Chatan. It's pointless. You are not going to make much of money. ATM is fine, OTM is fine. Just go and write ATMs at the money is fine. For buying, oh, the question is, the question is for buying. Buying, say if you're playing month-end contracts, buy ATM. ATM is good. ATM of month itself is like ITM of weekly. Okay, there will be quick reactions. There will be quick reactions in the price movements for month-end contracts. But if you're buying ITMs in weekly, that will be moving faster. So depending upon whether you're playing weekly contracts or monthly contracts, you can choose. My sincere suggestion is that you should choose at the money for monthly and ITMs for weekly. Sunny says that ITM is good. ITM is good. I agree. I am not denying that. Let me give you one example. Okay. Let's say you wanted to buy April 6th contract. Okay. April 6th contract, let's say 500. What is that 500? 39,500 is trading at 507. Call is at 507. Put is at 375. Right. Now, let's say you wanted to take ITMs of weekly, then let's say you wanted to play 39,300, 640 rupees on a weekly contract you are investing. What is your risk? 640 rupees you are placing for a weekly contract, and if say that you had a sudden something didn't work your way, okay, there is a sudden 100 points fall. 100 points fall, what will happen to the ITM? Think about it. From 636, 640, it can become 500, or not 500, 550 it can become, right? 80 points. For every 1 rupee, you will be losing 1 rupee. Too much of risk, right? But if it is going in your favor, yes. See, we are only considering profits. We are not considering the loss that ITMs can give. That's why, we have to be 100%, if not 100%, at least 95% sure that it is going this way. Then it makes sense to enter into weekly ITMs. Okay. But if you want to play safe, right, and manage your reward, I will go for 27th expiry, same strike. Okay. Same strike is trading at 1,133 rupees. Sorry, not 1,087 rupees. Now, would you go and then buy that? Of course not. It's too expensive, right? So, why should you go and buy ITMs? Rather, I would go and then take 40k, which is trading at 670 rupees. The weekly ITM and the month-end OTM are almost same. I would rather buy at 670 of 40k CE, and maybe if it is moving up by 100 points, I will be getting say 30-35 points. That's okay with me, because if market falls by 100 points, I will be losing only about 30-35 points. But in weekly, what I will lose is close to 90 rupees. So for me, it is not about what I can earn. For me, it is about what I can lose and how much of loss is acceptable for me. That's why I say even you can go and then buy slightly OTM, like 40k CE buying is okay for me, than you buying 39,200 CE of current week expiry, right? Because everybody thinks only in terms of profit, but if things go against, how much I will be losing? Am I willing to lose that? That's the question. I am not willing to lose 90 points for 100 rupees more. No, I will never do that. That's why I am playing on monthly positions, right? Yeah, Sunny is saying that yes, it is when you are very sure that it is going to be a winning trade, then yes, it makes sense. Even then, I wouldn't advise. See, these ITM strikes are for scalpers. You understand who you are. Okay, are you a scalper? Play in ITM. weekly ITM. If you are not a scalper, if you are somebody playing positionally, and then you know that the market is going in either this side or this side, take reasonable positions, right? Reasonable positions. See, ITMs suddenly, if there is some 300 points move. For example, yesterday there was this rally, correct? There was this beautiful rally that happened. Suddenly it went almost like 300 points. Just in a matter of seconds, it went, a few minutes it reached here. 15 minutes, 555, 15 minutes it reached there. Right? If you are playing an ITM strike, suddenly this one trading at 600 would have already become 900 or 850. 250 points, correct? Now you will be feeling great, and then you think that it will go to 1200 and you waited. Now it fell like this. Now the same ITM strike which was at 900 would have become 400. Isn't it so silly to put ourselves in such a high tensed environment by taking weekly ITM? Rather, let's look at the same case with a month-end contract. Something was trading at 650, went to 750 when it reached here. When it fell down, it came to 550, right? Now, I would have gained 100 points. If I didn't book it, I would have been in a loss of 100 points. Now, what will happen if you are playing weekly? You saw this 500 points, 400 points move. Something was at 600, became 900, 300 points it gained. Then from there it became 500. Then you have lost 400 points, correct? Now it will affect you mentally. You will start thinking that, oh my god, I lost, I should have booked 40k profit. Instead I am in a loss of minus 20k. Then you will become aggressive. You will do some sort of stupid decisions here and lose more. Okay, maybe when it is 400, you will be taking like 1000 quantities and all this indiscipline, all these things will come to you when you are playing on a weekly contract. Why am I, see, even though I am giving all the analysis, and then almost every time we are getting right kind of directions as we are predicting. It's not that it's not a 50-50 time. I say market will go up and then it's going down and then it goes up. No, it doesn't happen that way. We are getting almost all the moves perfectly. What is the difficulty for me to play in intraday? Because I know where I lost my big money and how it triggers me, how I will be psychologically disturbed, how I will fail my discipline. All these things I know. That's the reason I am playing on monthly positions. This is more of a discipline and long-term sustenance than quick profits and getting out of the trade, right? See, now it is making this move. I'm not even checking whether my target is hit or not and all. I am just, trusting my system. Now I will check it. 683, 16 points away. Let it go. That's fine. So what I mean is that it's a greed and fear game. Understand? Market is nothing but a greed and fear game. I am putting a limit to my greed, but some people don't. So, basis which we are rewarded. So, Jatin, Sunny, any comments? Please feel free. 692 now. 8 points away from my target. 8 points away from my target. Come on. Don't reverse from here. Please go. I said I had PE positions here, right? And got some opportunities, but we are looking at the target here. So if somebody had taken a PE position basis this, that's fine. But since it's a breakout, we can also expect it till here. So you may want, if you have taken something here, PE position, you can exit that and then take it here when the target is met. This is the candle that destroys the gain. But interesting thing is the call value is not decreasing. It went to 690, now it is trading at 680. So even with this return, it's only like down by 10 points or 12 points away. But when it was here, it was at 650. So it literally gained a lot than what it is losing. C is not losing much. Instead, it is gaining faster. Yeah, I think you guys can go ahead and then book the profits. If you have initiated here, book it around this zone, anywhere, or keep trailing it. Trailing is best. Because any second it can go back again, up. And see this, lows are increasing, right? The lows are increasing and then going up. So typically that's what you will witness in a head and shoulder pattern, because that's how head and shoulder patterns are formed, right? So typically you will see that ascending lows. Is that due to volume? What volume? Which one you are asking, Selvi? Like why is it coming down? What is your question? I mean, is the question why it is coming down from here? That's pretty easy to answer. Let's see who gets the correct answer. Why is it reversing from here? Yeah, CE price is not changing because the momentum is there on that side. So the side that has the momentum will not lose its premium much. The side that is losing the momentum, even if the market is coming down, will still lose its value. For example, put, let's say it is at 620 here. If it reaches here also, it will be like 622 only. It won't appreciate much because market is in a sell-off mode of P's and buying calls. That's what it indicates. So that's the importance of keeping a trailing stop loss. I'm sure those of you who entered here did some sort of stop loss, SL orders and exited. Can we initiate a straddle here? Straddle calls are very high in value, Naveen. Go for at the money call, at the money put, and 500 points away call. Like 40k call and 39,500 put. You can go for that. Oof, look at that recovery, guys. So we are halfway through our targets. Now it's going here. And did it hit the mark? I wanted it 700. I wanted to be sold at 700. At the same time, I'm going to buy put at 595. So double order I have placed. I placed double orders. One, I am exiting my call, and second, I am entering into the put at that price. Jatan, it's not profit booking. It's not profit booking. Let's see who gets this right. Why is the market reversing from here? Or it made such a large green candle, but why it's finding some resistance here? It's not even UT3. Before that, it's reversing. So supply zone and 200 EMA resistance, maybe come mind. That is one of the reasons. But then it's Siddharth is right. It's day I. Look at the I of the day. So this is today, right? This is today. What is the day I here? You see this? Why did we draw this blue line? Because that's a day I. Whenever the market is trying to make a new high or new low, it will find some support and resistance. So it went all the way up here, but it is finding its resistance. But doesn't mean that it should always come down. It is only slowing down. It will go up and hit this target. That's why I said if you have entered here, book this profit, again you will get a chance to re-enter here, right? That's what we are trying to do. Maybe I will modify my order to 705, that becomes 7k. 700 itself, people will put like 699.95. So all those things are there. That's okay, I don't have to really, if it goes I am fine, otherwise I will carry it, no problem. Even if it reverses from here down, I have no problem because I have a writing. I have written first week of April contracts. That's going to give me money. Okay, I really wanted to check about the brand reach of this channel, so I'm going to create a poll. Okay, so this is about the reach and know what's happening. So please be honest and fill it. It will help. Oh, it is also near 0.618 mark. Maybe intraday Fibonacci things could be. Yeah, all that it takes is just you have some Facebook or WhatsApp groups with somebody interested in you have a community or group that is into stocks or stock market or in option trading. Just saying that this channel exists and probably sharing the link. That's all it is. not wanting you to do it. I'm just saying that if you feel like, right, you can do that. I really wanted the community to grow. Uh, See, I have about 2,500 friends on Facebook, but when we post anything, all that I see is some sort of critical things, and then judgmentally they are asking certain things. That's all, because they know me as trainer, corporate trainer. They don't know me as option trader. So when I posted this, because it's a new channel, they are like, show me your portfolio, this shit, that shit, I really got annoyed with that. Either you like to join. If you don't like to join, don't join. Just keeping things running for just for the argument's sake, it's draining the energy. So I thought, if there is any like-minded community in which you would like to say that, hey, there is one guy like this, and then if you want, you can join in. That will be a great help. That's all. So multiple reasons why it's coming down. Somebody says that it's Fibonacci 0.618 reversal. Somebody says that it's 200 EMA reversal. Somebody says that it's day high, so it's trying to break and it should return. All are right. All are right. Oh, thanks a lot, Siddharth. Really, that means a lot. Thank you so much. See, I know a bit of how the algorithm works with YouTube. The channel should not be stagnant, like not posting any videos or sessions like this. That has to be there continuously, which we are doing. But the viewers have to increase and the subscribers have to grow steadily. Only then the YouTube algorithm would pick it, and then when somebody signs in, it will show in their recommendations that there is some guy doing a live session now. Probably they will come and check, right? So that's how it works. But if there are no subscribers going up, or the viewers are not going up, then the algorithm will give some other channel some preferences, and we will take lot of longer time to get the reach. So hence I was asking this question. Anyway, this is not your main concern, just that I wanted to check if there is any possibility for you guys to promote. Calls have come back to 660 levels now. Premium erosion at its best. So let's see how much. Close to 2K now. From the writings of next week, we are able to reap 2K profits. That's good. Trust me, this could be the target from this, right? But what can also happen is that yesterday's this piercing, this chain you see here, right? Like the spikes, it can also go there. So how many points that is? If I have to calculate from here, 628 to 695. So another 70 points, it can go further higher. That's a possibility. Yesterday's high, it would like to test. Wow, complete erosion, guys, complete erosion. Oh, catfish people with profit. Uh, See that's a problem, right? The thing is that if you keep sharing the profits, what will happen is they will be you are inviting trouble. You are actually inviting trouble when you post profits, because suddenly, some days, if there is some sort of loss or something, okay, and then you are you have to post every day, that's fine, that is okay. If there is any loss or something, then people will see that, and then they will say that no, you wouldn't have made only this much loss, you are playing in some other account. See, there are many ways people do that. Simply I'll tell you. Okay, you have two accounts, zero the. Oh, give them ideas through profits. That is there. Hmm. See, I know a lot of channels are there. What they do is they have Zerodha account and they have, say, TradeSmart account. In one they will buy put, in another they will buy call. Okay, and then in one of it, if there is any sort of 1,000 points move, they would be making a huge money, right? Huge money. They will take the screenshot of that and then put their logo and all these things and then put it. Very silly things people do. And really, I don't want to do grow at all that way. Rather, let the idea speaks for itself. Let people make real money, and then let them promote. That's what I believe in. Oh, I see. I see. Okay. After that, correct. That's true. Maybe that's why. Yeah, creating some sort of Telegram ads. How to do Telegram ads in Instagram? Oh, correct, correct, correct. I understand what you're saying. Ha, 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 ha. Yeah, maybe that's a very good idea, Siddharth. That's a good idea. Right. I think I did the base of it. So that's the target we said, right? Once it comes here, keep the yellow zone as target. But where in yellow zone it will reverse, I was not very sure. It can reverse from here itself and go back. It can reach this and then go back. So every possibility exists. But looking at the way it is falling now, we might even see it touching here. So, calm mind, they are bigger scammers after people like Malia. Yeah, true, calm mind. So many things, they have some sort of the YouTube shorts is there, no? They will keep their phone, and then that will be like saying 10,000 quantity, and then it will be showing 5 lakhs, 6 lakhs, and then it keeps changing, and then somewhere 7 lakhs profit, 10 lakhs profit, and all they will post. Very big scams are going on. What are you doing on YouTube? If you are making 7 lakhs a trade, what are you doing on YouTube, right? You should be busy making money. Enjoy the life. Take that 7 lakhs, go abroad, enjoy, right? Um, Big players will never come on YouTube. Show me anybody who is on YouTube who is a big player, right? So in this, the genuineness and things are being lost. That's what it is. That's the sad thing. You can really offer value and grow. That's a different breed. But just faking and then growing, I don't believe in. Anyway, 150 points down, but only 20 points down in CE side, is it? No, the CE side actually was trading at 680, right? Now it is at 646. 40 points gone. So 40 points of value lost there. But yeah, so you need traffic, so try adding channel info in FASP. So what happens is that there is in every FASP levels that we post, at the base in the signature you will find that YouTube. So that is the only way to promote your channel. You cannot directly give a link in the descriptions in TradingView. That's not allowed. In signature column you can use it. That is one of the reasons why I stopped in talking in TradingView. So many times regulations are being coming. Already we are in a very stressful environment. Market is a stressful environment, and then I'm trying to build the channel. Maybe I will talk about my course. Maybe I will talk about what my Telegram channel. And I'm being approached by the moderators that you are using your private things, you are promoting yourself, all these things is coming. Of course, who doesn't want to promote, right? You are sitting for 6 hours for what? Right? In front of the system, why do you have to sit for 6 hours? Of course, you need that coverage and reach out. Definitely, that's the principal idea behind, right, in the market. But you come and say that no effort should take them away from their link. That's their concern. They should not. They don't want anybody to click on a link that leaves the TradingView platform. Like YouTube also, I cannot say that I'm live on YouTube. So much of restrictions, and once in a while, if you ask some questions and then I say something, that's all been I have to give some explanations and all these things. So I really got tired of this. So that's one of the reasons I stopped in TradingView. How Lux became popular, earning huge money. He promoted himself here. God. Anyway, see, the problem here is I'm really a trainer who has been known to many companies. So people add me as their friends and social media, and then WhatsApp. If I post some status, everything that they see, right? Now, for them, they have seen me like 12 years only as a trainer. So I'll be posting my training photos, some sort of clips from my training events and so on. And they always see that in that light. And then this trading and all these things, I started posting it on social media like only 3 months back. Now, friends, family, social connects, everybody thinks that I have stopped training and I am doing only this. So why Satish, as he closed his company, what is this trading thing that he is doing right now? So a lot of criticisms are going on. And then ultimately, uh, it's not really nice people to be judgmental. Why can't somebody be good in both, right? Why can't it be? They think that only you are a failure in training, that's why you are in trading, and I know that you will fail in trading also. With that mindset, if people look at you, you don't have to prove them anything. It's just that these thoughts are too tiring to hear. True, Siddharth. That's true. That's true. And they have their own ways of, oh, look at the breakout, right? They have their own ways of predicting how much income you are making, all these things. Just like that, casually people ask, so are you making like what, 2000 rupees a day, 5000 rupees a day? Just like that, they will ask you, and then they do some sort of math, try to find out how much you are making. It's very, I don't know, it's funny, kind of funny. All right, so the prices, maybe I will re-enter into the call now. Call side, I can go and add some positions, because I see that now we can see this as a opportunity. I have taken some positions. I bought same 635. I got another 100 quantities. And it's already like 643, so I might as well exit this with a 25 points. So 25 points is 660 rupees I wanted to exit it at. All right, on this here, exit. Right, I placed in order at 660. So 635 I entered, 660 I have placed the order. 15 points means easily I will capture, but then what is the point of waiting so much and then making 15 points, right? Capture some good 25 points. So again I entered at 635, now it's at 650, another 10 points away. 10 points away, then I should exit my trade. 652. Yeah. Yeah, true. Siddharth, I agree. Uh, 655 it came. 5 points away from my target at that time. Now it is at 647. I think that's okay. It will go. There is a quick pullback. So back to 650 it is, and the prices have not even moved upside, right? It's only in red, and it's already like 650. So it's a very good quick bounce back. 660 shouldn't be a problem. It should reach in no time. Sometimes these are the easiest quick 25 rupees that you can capture. So 57. $59. Yeah, sold. So again, like 25 points captured. Done. So yeah, Sunny, it could be frustrating. See, there will be no time even to explain. Quickly, I said I will enter and then I exited, right? If I have to look at the timing, it's not more than 5 minutes. The entire trade is done and 25 points captured. So, what confidence at which I am able to enter? It's because, see, it has inched so much to reach here and then falling with the momentum, and then the candle is slowing down, right? So, when you see such a sharp fall, then the PE premiums would have increased so fast. The PE premiums would have increased so fast. And I am saying that the theta decay has to happen. How the decay will happen on the PE side only if the market goes up again. So quickly you need to read this and then act faster, right? So 635 somewhere here I took and then exited here at 660. Now I don't really care whether it comes again one more time or it goes up. I don't care. I will wait for the extremes. Let it reach either this extreme or this extreme. So Siddharth suggest me I have a 20 days old positional option which I should have squared off but didn't. Mistake. Now no liquidity in that strike. How to exit or stay safe from buying delivery? Positional option. Is it yeah, oh my god, that's the risk of market order also it's not going, Siddharth? My god, this liquidity is a very big concern, and oh. What is the investment on that? What is your investment on that, Siddharth? $15,000 sellers. Now the problem is with such low liquidity, most likely scenario is that it will turn into zero and automatically it will be squared off. That's the only scene that looks possible. But there are some attempts that can be done, but I'm not really sure how that would work. Maybe but you bought a put, right? This is F&O, right? It's 20 days old positional option, correct? So it is an F&O. My god, that is. No, why should you take delivery of stocks? Oh, okay. NTPC breakout trade. Maybe from somebody else's account, what you can try doing is, but it's pointless. To avoid this, what I can suggest is maybe if father's account, mother's account, something like that, you create one F&O, you place an order, maybe try selling it for 1 rupee and you sell it for 1 rupee. It will be purchased. So you are exiting that position. I think you have shorted it. Oh, you have short the position, I think, right? You have short P and then it has gone the other side, I believe, because I am not able to understand what went wrong in that trade. See, if you want to exit the shorts, somebody has to buy, right? So you can use your own account to buy that, so that you don't have to buy any sort of 11,000 quantities. Just the loss alone you will book and exit. And your father's account or mother's account in which you bought, it will turn into zero. That's okay. instead of you putting yourself a burden of buying so many quantities, you can, oh, you have bought it 3. But you have bought it, right? If you're selling it, then it becomes short positions on your father's account. Don't do that. That's not going to work. That's even more problematic. If you add a short position and then you want to cover it, then yeah, this would work. Both the accounts will make some loss, but then you don't have any obligation. Yeah, correct. If you're holding it till expiry, it will anyway turn 0. That's correct. You don't have to do anything further. But I don't understand why you have to buy 11,000 quantity. That part I didn't understand. It's an option. You buy or you sell, that is eventually going to turn 0 or some value will be there, for which there is no obligation for you to buy a stock. I don't know why you have to buy a stock. Oof. Recent SEBI order, but that is after 1st of April, right? Not immediately. But I don't really know. Maybe I'm not the best person, but some of you are doing on option, stock options. Please guide him out. I have very little idea about this. One lot is 11,000 quantities. My God, Raviji, that's so huge, right? 3 lots he's having 33. Oof. Oh, so Naveen is saying that it is only for at the money or ITM you have to do that. Otherwise, you don't have to do. That's a good thing. Wow, I see this as second opportunity to enter. Another order that I would like to take here. Again at it got executed at 6:35. I wanted to buy. I saw this as 6:31, so I placed it at market, but it's okay. Not much of damage. But this time I need only 20 points because I'm taking a contra position, right? So I should limit the risk. Cool. I am placing this time at 6:55 itself. Last time I placed it 6:60. It made a spike and then it exited. Okay, but after that, even 6:58 it was struggling. So this time I'm going to exit at 6:55. Oh, okay. I'll just take some water and use restroom and be back. Maybe few minutes, just few minutes. Very critical time. I'm not going to stay away from the screen for long. It's a critical move, and I have anyway placed the order at 6:55. You guys, in the meanwhile, can carry on the discussion of how to exit that stock options Siddharth has got. Please guide him out if there is any other better way that you know. I'm not somebody who trades in stock options, so hardly in my life, just because my friend once told me some 4 or 5 orders I would have played, and then each time I entered into stock option, I was making a loss of say 25k, 30k, like that. And with stop loss order and all, because 25k you cannot buy, right? So with stop loss order and all, we have to place it. All the time it got triggered and then became zero. Really lost interest in that stock options, but yeah, please help him out. I should be back in few minutes. Yeah. Okay, guys, I'm back. I'm sure you guys are still on stream, and let me know. Okay, that's fine. So Siddharth has got his remedy. That's wonderful. Thanks, Jatan and others, Naveen, for supporting and helping him out. So that's cool. Uh, See, one of the things I would like to suggest, please hear this out carefully. I'm sure a lot of you are now positional, holding the positions for the month end for breakouts. Maybe you are holding C and P all together. That's completely fine. But if you have taken any sort of intraday positions on the CE side or on the PE side, additional quantities. Say, for example, you had 100 quantities on both the sides positionally. Today, you took another 100 quantities on one side playing directional. Don't average anything. Exit the trades before 240. Okay, before 240, when you are finding some profits or good profits, exit it, because there might be a possible breakouts happening, and then it will be quick, very fast moves will happen. And don't want to be on the wrong side of the trade. Suppose you are holding C and then it's going down, you will be losing. If it is on the P and then it's going up, you will be losing. So square of your intraday positions before 235 or something like that. That's a good time to exit. I have placed it at 655. It's at 652 right now, but struggling to reach my target. Maybe I will wait for a few minutes and see if it goes. Otherwise, I will wind off my position and play only positionally. Because intraday targets are almost, not almost done, it's done only. Just enhancing my winning probabilities. Oh, 654 for 90. Oh my god, 654 90. Somebody has placed it and then my order didn't go. Just 10 paise, right? These are the things that really hurts. It went 654.90, but 655 it didn't go. So this is my fear I was talking about. Everything correct, but then some twist. That one I don't really enjoy much. Yeah, they always do this. Yeah, correct, Siddharth. They always do this. But sure, I think right now it is at 648. And another thing is that if I keep trailing from 648, let's say trailing stop loss, then 100% it gets it. Then I am selling 7 rupees lesser, right? So again, it's not good. So maybe I should only post like 654.85, like that I should place. Now it is at 640. Oh god, 638. Just in 2 rupees profit. So Yeah, that's right. That's right, Siddharth. I've seen that happening many times now. I mean, this is the only fear I have. You do all the analysis, everything right, and then missing by 10 paise, 5 paise. This is all really, it it creates some sort of stress on you. Just until that point that order gets executed, they'll keep you restless. But now when it reaches again 655, it will go to 675 also. So they will create all this panic mode and beat. So okay, and I am very clear whether it is profit or loss. 235 I am going to exit. I will wait till 235. If it is profitable, non-profitable, doesn't matter. I am going to exit. After which it's no point, because market can go very volatile after 240. And look at the length of these wicks, right? There is one support, and there is double side wick, and there is strong resistance, then there is a strong support, then there is a strong rejection, and this is indecisive. Both the sides it got rejected. So clearly indicating a breakout is weighted. Any side it can happen. That's why I say that 240, beyond that, beyond 235, don't hold, exit. Let's carry only positional. Okay, Shanmugam has asked something on chat. I'm going to watch that. If market goes down, please do let me know. I'm going to type in Telegram. Oh, it's going down. Okay. Oh my God. Okay, I see. Thanks, Siddharth. Thanks. Really appreciate that. So any moves that you see before 235 could only be a trap. Okay, don't get fooled by it. It will quickly come back also. So it's fine. Thank you, Siddharth. See, from a profit, it has gone into loss in that last position. But it's okay. It's only like 15 points away, and I can easily come out of it. So easy to exit these trades, not a problem. Even if it requires booking some loss, that's okay. Overall day is in good profit, so not a big deal. But I would really love to get this out in profits. Honestly, that's something I would love to. But let's see the chances of market going up again. It could be a sharp pullback. Hey, hi, Ganesh ji, very good afternoon. How are you? As soon as I started typing, it fell, is it? Yeah, right. That's what happens when I don't see the market, all the moves would happen. Don't know what's with my luck. So that's why I put it a word preemptively. Just, uh, knowing my historic luck, I just said that, and thankfully, Siddharth was giving me a quick update. Yeah, so 6:35 I took. It is currently at 6:24. I'm sure shouldn't be a big challenge for it to clear off. Even if I'm able to exit at cost price, that's okay. Don't want to stay long in the trade right now after the market has moved so drastically. See, in 10 points, 10 paise, I missed my opportunity, and right now it is gone into a loss of close to 1000 rupees, right? So, these are the things I am a bit concerned about. Things that are not out of your control. Um, it happens all the time. Now, really, you look at this, what you will start to think is that even a 635 exit is good, like that you will think. Suddenly, by the end of the day, it might trade at 700 also. That's the kind of thing happens in the market. Ganeshji, if you want, you can initiate a strangle or a straddle. That's what I would advise, because it's unclear which side market would go. It looks like it's going down, but you never know on a month-end expiry. Always month-end expiries are surprising elements, right? So you should be open for both the sides move. That's why I'm suggesting a short straddle, long straddle or strangle. Definitely PE premiums are butchered for tomorrow. Now they will try for CE premium. Sorry, CE premiums are butchered. Now they will try for PE premium erosion. That can happen by moving the market up. If I have to go by the logic, then that's the logic. But market has its own logic, right? So it's always unclear. 20 minutes, and after that I am exiting this, irrespective of what happens. Whether in profits, loss, nothing, I don't care. Which strike, that's what I would suggest, a 40k CE and 39,500 PE. Oh, this one Bollinger Band. I think Siddharth and Santoshji can check this out. What's happening? Whether this band is going to uh, pull it up, or it's going to pull it down, or it's going to expand. We'll watch that. Okay, you already have P. Now just go for the CE buy. Just in case if there is a sharp recovery, you should have some backup plan, right? So this is a good price because it was trading at 700 rupees, 690 rupees. You are getting it at 620 ranges. It's good, right? Like you are getting it at a very day's low is only about 612, and you are getting it at 619, 620. It's a good return if it bounces back. So now they will hijack the premium. You see, on the call, on the put side, they will hijack it now. Now this is, yeah, that's right. So this time, still I am keeping it at 655. I am not changing it because I feel that they might, try to hijack the premiums. Maybe I'll trail it, and possibly what I can do is, instead of keeping at 655, I will remove that order and then do another alternate thing. So the other pending orders, I can just delete it. It's not needed. So keeping the order book clean. Now just this quantities I wanted to keep a trailing stop loss after it crosses my buying price and gives at least some 5 points. Okay, like say 640 onwards, I'll start trailing it. If sudden jump or short covering or something like that, sudden moves happen, I'll try to maximize it. Wow. So 645 I will keep. 648 can be the trigger, and then I will follow that after that. plenty of traps will happen at this stage. A lot of traps will happen. I got only 10 minutes now, so to square off my intraday positions, it is at a good, decent price now. 644, 46, 48, and I have placed it. Now I'm going to trail this. Oh, it got executed at 648. Fair enough. That's okay. That's pretty good. I'm happy. Because right now I am holding only the positions that are positional trades only I am carrying. This is easy for me now. Glad that I did it because it's currently at 640. And another thing I would like to do, guys, some of you may be doing a paper trade, right? Oh, thanks a lot, Santosh ji. Really, that means a lot. Thank you so much for the reach out. Really, these small gestures matters, and it's it ties us down closer. Really. Thank you so much. So this was the reason why I said there could be a way that market might go up and then reach. The premiums can erode, right? So I'm happy that our decision to exit the intraday positions is done. So there is one update I need to give. Those of you who have initiated an actual real money in writing that 38,300 and 40,500 can close their positions. Okay, you must be. I'm in a profit of 2,500 rupees from that. My God, look at that, 655. My original target is hit, 655. Right? So that's okay. Now those who are doing a paper trade can continue to hold on. Okay, if you book it now, maybe whatever, I don't know what price you sold and all, maybe around 2,000 rupees at least you should be having profits. Correct? So exit that trades of writings. Why? If there is a 300 points, 400 points move, your profits will run into loss from the writing. You don't want that. Right? So I'm going to exit both my positions. April 6th contract. Let me press square off. Yeah, it's squared off. Okay. So what is that I made? 2,800 rupees made. Okay. So 2,800 rupees booked. Now any directional positions are open. In the sense, if market goes down, no problem. If market goes up, no problem. If it stays there and then there is erosion, 1 hour of erosion I am okay to deal with. That's okay with me. Fine. I can deal with that. But if there is a breakout and moving 300, 400 points, then our writings will hurt us. So that's why I asked you to square off. Okay. Hi, Adari Siva, welcome. Good afternoon. I think you are the friend of Santosh. Oh, great. Welcome to the channel. Really happy having you here. I'm sure you will have some great time with the small community that we have. You don't have to call me sir. You can just call me Satish. That's okay. Um, I'm sure. Oh. Look at that move, guys. Look at that move. Now I'm going to place an exit order of this at 700. Okay, that's okay. I'm going to place the exit order of this at 700 because from the call side alone was able to capture 15k so far, right? So if it goes there, 20k was captured, and whatever I have lost on the PE side is already been taken care of. And then when there is a fall again I will buy the C. So I'm going to take that chance. That's okay. Acceptable chance. Yeah, the same way it came down, the market is acting, right? Fierce actions are happening, right? Look how monthly contracts are so fiery, right? It's absolutely um, making how many points? Let's measure the height, okay? From low to high, if you see, that's 150 points of move, just like that, right? 150 points are moving. Which is one of the reasons why we strictly take 25 rupees out of the trade and exit, right? Because these markets are unpredictable. If you have been working with a strategy that worked in the past, may not work now. $662. Oh boy. So, Mr. Shiva, you are also doing option trading, or you do in stocks? What do you do? 665. From 615, it has gone to 665. 50 points gain. Crazy. Really crazy. So, oh, we have been known to each other for almost like 3 months or more now. Yeah, we formed a very good rapport and relationship over time. Uh, so anyway, I sincerely appreciate all the things that Santoshji has done on various time frames, be it creating some strategies, discussing some ideas, or just normal talks. Something not even connected with trading. We have a lot of things that's great for discussion. I really enjoy talking with Santoshji. Over phone we have connected many times. So really it will be awesome to catch him up one time in real. So waiting for that moment sometime in April, maybe, or May. Oof. Oh, certainly, certainly, Shivaji. You can really contribute in any form, be it analyzing and finding some patterns, or maybe you have some sort of trade setup that's giving some indication of the directions. Whatsoever way that it is going to be beneficial for the viewers, I'm more than happy to welcome your insights. Please feel free to do anytime. We also have a Telegram channel, and if you want, I can share you the link. Join in, and then see a lot of people post actively about the current trends, what's happening in the global market, and so on. Maybe something that independently as an individual we miss out, collectively we are able to capture different perspectives. So it's a great small community, but highly dynamic, I would say. Uh-huh. I don't want to comment on that, Santoshji. It's very risky to make a comment on that. But not necessarily there is good talent and potential everywhere. Yes, here the number of people who are very much passion driven is high that I have seen, mainly because we have people like Vishwanathan Anand and A.R. Rahman, a lot of legendary people, culturally intertwined. You measure the success with somebody famous, and the qualities of those personalities, and are being closely observed as well. So as a child growing in this sort of environment, we have been taught those values, and make sure that it's getting ingrained into you in your childhood. For example, when Vishwanathan Anand became a grandmaster, it was a rage all over the India. But in Tamil Nadu, it was volcanic, right? It was unimaginable. The kind of madness and craze. People actually shifted from cricket craze to chess. So it inspired really, really, and that's one of the reasons why Tamil Nadu is the strongest, uh, you know, fort for chess competitions. You play the same tournament in Delhi, you play the same tournament in Assam, you play the same tournament in Mumbai. There is a clear difference of how strong a player is, even at the basic levels. Here, it's too strong because everybody wanted to be Vishwanathan Anand as they were growing up. So that sort of upbringing is making you more competitive, and it's basically the childhood is competitive rather than enjoying the childhood itself. So that's the flip side of the story. Yeah. Have you met Vishwanathan? Yes, I have met him once he became world champion. There was a government conferring him with some awards and recognizing his achievements. So, and there was some sort of simultaneous exhibition organized. I had a one-on-one discussion. It was a lot of people were there. I interacted him just 3 feet away. I gave handshake and then congratulated him, and then asked about his experience, and then talked about how's it going through the Russian army and faced them. So those we have a recording of that conversation as well. Photos are also there. So I went and had some good time. I was in college at the time, engineering college. Oh wow, yeah, he's absolutely no doubt about that. He's one of the most humble sportsmen. I mean, I think people often say Sachin as the god of cricket, and idealize him close to the god. Um, but if you have met Vishwanath Anand, or you have been with him, around that, that aura itself will tell you he was no less than Sachin in his field. He was no less than Sachin in his field. $6.55. Okay. I think the real game is on. For 240 it is. Maybe there is some serious moves. Oh yeah, that's true. All this all three of them have, what to say, their presence can be felt. Whether you watch it on TV, whether you watch on YouTube, you can feel them. It's like they are right in front of you. That sort of personality they have. They are see-through people, honestly see-through people. When they say something from their heart, um, you can really see them. Yeah, that's true. It just feels godly. True. So rejections happening. So, what I am planning to do, I will tell you, since some people would have taken a call based on yesterday's analysis and discussion, some of you would have taken some positions, right? I am planning to exit at 705. Okay, so that gives me about 7k, and then already intraday I made about 15. So like 22, even if brokerage is all gone, like say 20k is what is made, what I would do is I would like to close that and then deduct 220 rupees or 200 rupees from my put position, so that it gives me immense freedom to play around. I can go on extensively writing, only writing, and then make money. So that liberty will come. That's the reason I am looking for exit at 705. For people with capital who have done some writings at the base, can also try doing this. Otherwise, just don't do anything. Just don't do anything at all. Look for market to either break 40k or 39k and exit that position that is giving you profit. Okay, so two options you got. If you don't have capital, wait for the market to either break out 40k or 39k in coming days. Don't do anything at all. Let the market go up, down. Don't touch your positions. If you have capital, you have done some writings, then you can play the strategy that I was saying. You can also exit at 705 or something like that. What a candle, guys. I have exited my PE position. Oh, Abhishek, have you exited at profit or loss? Like, I mean, your position is not clear. Like, were you holding both C and PE, or what is it? I don't understand. What's your position? If you can share a bit more about your positions, then I will be able to give better insights. Right now, it's unclear whether you are in profit or loss, where you entered, where you exited. Oh, you exited that in profit. Um, I think see, either you book your CE position, or the PE has already been ripped off just because of this move. Rebuy it if the price is much lesser than what your original position is. Rebuy it. That becomes your intraday profit, and hold on. So both are okay with me. If you want to book your C and exit here now, that's good. If you want to book, if you want to really rebuy your puts, that's also a good idea, because we are talking about some 1,000 points of move in coming days, and it will be really useful, right, to have both the positions. Now you see it's quickly coming back. So a lot of unexpected moves can happen. So be watchful. You have reasonable positions on both the sides. It's good. So you have entered a C at 39,350. So Abhishek, if you are going to take anything overnight, okay, I'll draw and show you. Watch these guys. Let's forget about the graph. Let's go to sensible. Let's go, and then say strategy creator. let's say if you are not having any position and you are going to just create, right? Just watch this carefully. Are you guys following? Just let me check before I explain this. Wanted to check. Are you guys following? I'm going to show the strategy what you can try for overnight. So quickly say yes, then we can, yeah, okay, Abhishek is saying yes. Let's go ahead and then discuss the strategy itself. If you are someone who wants to carry it overnight. Yeah, okay, cool. Go to this one. Now look at the premiums. Like it is at almost 39,500. 39,500. This is at 650. This is at 950 levels. 300 points of difference, right? So inherently, this one has more potential, and there is natural liking for the CE buyers, right? So you don't want to really go and buy this one because it's too expensive. Because if market goes down 1,000 points, this itself is 900, right? You will be losing big. So we are going to buy at the money put and almost same price call. Right now, this is the equation. Now, if the market moves this side, you are making money. If the market moves this side, you are making money. But unfortunately, if the market stays, you will be losing money, right? You don't want to do that. Now, how can you curtail this? For which what I am suggesting is to go and then choose a strike. Maybe this is where it is. The closer that you take, your profitability is affected. The farther you go, you will make more money. How I say that? Let's say 38,500. Let's say the market has moved to 39,000. You are earning only 43,000, right? 43,000 only. Sorry, 4,500 only you are earning. Correct? If the market goes to 39k. But the further that I go, if the market comes here, why is that showing more? Oh, that is because we are also holding a put, right? Yeah, correct. Wait a second. I should also do a writing of this. Correct. But yeah, for now I will not do that. Let it be. 1 second. Amazon is calling. 1 second. Alright guys, I am back. Do let me know if you're there and then hearing me. Okay. Alright, I'm going to explain the strategy now. Are you guys ready? Please do confirm if I'm audible, and I'll go ahead and explain. Okay, great. Sure. Let's get back to the strategy. Okay, let's first clear off everything. What are we trying to do? I want market to go down. That's what I'm looking at, right? So what happens if I choose, I'll be buying, right? This is what I wanted. But there is a possibility that market can go up, right? And if it goes up, one of the adjustments that I would love to do is maybe see what is the risk. It's showing 16,000 rupees is the risk. If the market is staying here itself or it's going higher, I'll be losing my 16,000 rupees per lot. So to cover that, what I'm doing is I'm adding some protection, right? Sorry, not this, this, right? Now my risk is limited to 11k, but profits have gone to 38k, right? But still, I wanted to know if I can reduce this risk further. So what I do is I go ahead and then buy 40,000 this, right? Now my maximum risk has become 28k. It has increased, but then there is a great chances for me to get out of this trade. This CE buying is only for small up moves. We are positionally bearish, and whenever there is any sort of sudden moves on the upside, we want to capture that, right? And what also we are going to do is we are not going to write any sort of CE writing. If there is any sort of gap up and all, we are going to earn more. Reason is, one, there is a PE writing that's going to give you money, and there is also a call that's going to give you money. So both the sides we are getting money, right? And I was saying don't take any sort of CE buying so far because of this nature, because I feel that market would be continuously going down, and we don't have to take any CE positions. Instead, adjust it with writings itself. That was my original suggestion. Now I am saying you to buy a CE position because I am thinking it might go higher as well as a retracement move. For that sort of any unexpected upside moves, we should have some cover. That's the reason we are taking a CE position. But in case, let's say that the market is going down, right? Now let's say that it is going down. Now you are not making much money, right? But why you are not making money? It's because you have also wrote a put position that's going to increase. When the market goes down, it's going to increase, but you have sold. So some loss will happen from this. But then this is 37,500. So 37,500, if it comes, then you are in profits. But it need not, if it is not going there and then it's say that it reaches here, there are adjustments that you can do. Surely there are definite adjustments that you can do. What you can do is probably the 39,500 you can close, and then buy another one here, something trading around 300 rupees, and then wait for it. Now why this 100 rupees, why the CE that we are buying is, we are not expecting it to reach here and all. What we are expecting is, if there is a 300 points move, if there is a 400, 500 points move, capture that, exit the position and maintain this, right? And then add more PE positions, average it, and then exit it. So by doing this on an intraday basis multiple times, this loss, your target should be like, how can I get this 28,000? If I'm able to get this 28,000, then both puts and calls are free of cost. You understand that? That's the logic behind doing intraday. I am trying to recover these losses that might come in future, and make sure my current position is free of cost. Then I don't need an edge also. When the market goes up, I will exit this in good profit and then wait. And then I might exit the CE positions. One leg by one leg I will exit continuously and make sure that I am maximizing my profit. It's not even booking some targets. It's like doubling your profits. That's the game plan I am doing. Okay, but you may be wondering, but if it is going down, then I am losing, right? Why should I do that? If you are like that, and then don't have this writing. Right now the maximum risk is 32k. Either side it moves, you are in profit. That's okay. Completely you are safe. Right? This is absolutely fine. Either side it moves 1000 points, you are making money. This is just one lot. Think about it for 100 quantities, right? So if it is moving say 1000 points and then it reaches 38, 600 or 500, you are making how much? 4k. 4k you are making. So this 4k into 4 is 16k you are able to make, right? So exit all together if there is 1000 points move. If there is a small moves, then we are going to wait. And that waiting, today it consolidated and then tortured us, right? If you know that the market is going to consolidate, then write the extremes of the FASP levels, T7 and T7. Today I said I recovered some 2,800 rupees. Now 32,000 is the risk, of which 3,000 rupees or 2,800 I am able to recover today. Likewise, do it till the end of the month and then collect the premiums, right? So that's how you manage your positions. Is that clear, guys? Oh. What is this? I placed it at 705. It made a high of 704.95 and then returned. This is really crazy, guys. You see that? How much stupid it is, right? I mean, seriously, this is such a nonsensical thing. See, that's what I'm saying. Supposedly, if that got triggered and then at 705 it got executed and then it came down, I will buy my CE position again. You see, multiple times you do this and then try to recover this amount, whatever is showing us projected loss. If you can recover this in 2 weeks time or in 3 weeks time, let the entire position be free of cost. So my objective is not this. I am not trying to get unlimited profit. I am trying to save my loss. When I save my loss, when I have taken it out from the market, my position becomes free. And that position, when it moves either side, I don't need even an adjustment. Any side 1000 point moves, you are doubling your profits because you have recovered your loss. That the loss that's showing is already in your bank account, and the move that you are going to get is going to give you double the return. So you are actually doubling your profits by doing so. That's the strategy. So is that all clear, guys? Yes, this is one strategy that I am talking about, Abhishek. So there are 20 different types of adjustments that you can do. Okay. So you choose. You are going abroad, you are in travel and wanted to carry anything overnight. Whether you want an adjustment, since it's time zone difference and all is there, you decide how you wanted to do it. Definitely, I know you are one of the persons who ask for this session, strangle and straddle complete adjustments. And there is one more person, but then I'm not sure how many people would turn up. Not even a session, it's more like, interactions only. Like you will be sharing the screenshot of your positions and then asking me what should I do, what should be the right adjustments. That's all. I'll be guiding you. It's not even maybe one day of class and then continuously support. of your positions. I mean, this is really killing the psychology, right? Like, you did a good analysis, you placed the order at 705, and somebody is exiting at 704.95, for which your order don't get triggered 5 paise, right? Now from there it is trading at 674. Now what happened? 30 points fell down, correct? Now if I have sold there, if my order got executed there, then I don't have any C side responsibility. When the market falls, I am more happy. And when I'm able to get this at 675, what more I need? I captured 30 points for nothing, right? So, missed opportunities. This happens quite often with me. Okay, Siddharth also asked for pure writing and doesn't have that free capital. See, it's not about many times what happens is we have capital, we don't have time. We have time, we don't have capital. We have time and capital, but don't have knowledge. All are various possibilities. But one thing I feel is that whether you have capital or not, you should never stop learning, and that learning can be practiced through paper trades and observed. And then you refine that before you play with the real money. So who knows? Suddenly there is some good opportunities. You get some 30% hike, and suddenly there is a lot of free cash comes to you, or maybe your some investment matures after some 3-4 years. You get some good returns. That time you will have money. That time you will have capital, but you don't know what to do with that, right? Honestly, every 5 lakhs is a different ball game. You start off with 3 lakhs, maybe 1 lakh, and then you have 5 lakhs, you need different strategy. Suddenly you move into 10 lakhs category, then it's a different strategy. 20 lakhs category, it's a different strategy. Your strategies will evolve with time, with your capital. So, I don't know if somebody from our stream only has placed that 704.95 because it's not even 699.95. It is 704.95. I said I'm going to place it at 705. Somebody was smart enough to place at 704.95. Oh, that's very good, Siddharth. Yeah, you should know when to pull out the money and when to keep it in the market. So definitely good technique to pull out. When there is really an adjustment, and then that's when you need it, you bring the money in. That's fine. You don't have to have all the money that you have in the trading account. Oh my god. So both the sides I got really cheated. Oh, I placed put buy at 595, it reached 602, so it did not pick up there. I placed a sell order at 705, it reached 704.95, it didn't pick. So both the sides I had a missed opportunity. Hopefully this time it hits. I would really love that if it hits completely. Bollinger is not working. So I think it was my old observation that it was not so helpful. Um, I can't explain why, but uh, it doesn't really work for me. It will touch 705. I hope so. If it touches, that's great. See why I am exiting that. I'll also explain you with that position. Supposedly, I let's say that I have this position, okay, of 27th. Uh, let's say I have this position and this position I have, and I've also returned say 37,500, right? So now let me do the adjustments. This one is at 635. This one is at 612, and this one I sold it at 200. Okay, now this is the position. This position, what happens is that if the market goes up, say till here, and then what do I do? Let me save this, create new. Right, let's just create one and then go ahead and then analyze. Okay, now I am finding a reversal from 650 levels. When it reaches 650, let's say I exited this at 705. Okay, so I exited this at 705. I booked some 1,500, 1,750 rupees. This is one lot, right? So just I'm showing for one lot. Now what happened? My maximum risk is limited to 8,500 rupees, and I am standing to win this. So can I earn 8,000 rupees in next to 27 days is the question. And the more that I am able to do that, I will be standing to gain unlimited profits. You see, this is what I am trying to do. This is what I am trying to do. So every time that I find, again, if it is coming to 600 levels, I buy it. If there is it goes up to 650, I exit it. Multiple times that you repeat this, and then at some point this entire position becomes free. When there is a market move, you stand to gain really good money. $680, and trust me, when they give a close like this, when they are going to close it at the top, say towards the end of the day, if they are giving a close at the top, a lot of people will be thinking, yeah, it is going to go to 40k and so on, and then carry overnight CE position. But tomorrow there will be a twist, there will be a gap down or something like that. Big players know how to trap them, and I don't really mind even if there is a gap up. We have some edges, right? So don't have to worry. I will use that as an opportunity to buy more 39,000 PE, or even I will switch to 40k PE. Then adjustments will be done. Basis our understanding of the market, we'll keep changing the adjustments. Cool. I think this was a real blast, but didn't materialize. So another thing is that remember how to define a discipline is sometimes we say that okay 5k is my target, 3k is my target, but then sometimes you achieve it in one trade, but you will not be keeping quiet. You think that okay in one trade only I get 3k, then let me see if there is real opportunity I'll enter like that. Very much you will tell yourself, but then you will enter and then make more money, and that making of more money is very dangerous because some 2 days 3 days you will do and then third day you will forget that you had a discipline and then you will go on buying. Now what happens is that for me this is the target. Now this target, how can I achieve it? I will plan. So remember this looks like 8,000 is nothing, right? But then it is one lot. In one lot how can you recover 8,000? Right? You have to be it's a huge task. It's not a one day thing. It's not one day thing. A lot of people tend to think that okay 8,000 only, right? But it's one lot. Remember that. So I have to capture so many points, and I will break down this into the number of days left from this expiry to the positions, that is 27th of April, and try to capture those points. 100 points a day like that. If I go, how many points I am capturing? 250 points. So 250 points for 10 days is 2,500 rupees, correct? For 20 days is 5,000 points. Still I am in a loss, correct? That means there is a potential for loss. It's not like loss, but there is a potential for loss. That's why adjustments comes into picture, and then we try to get as many points as we can in a given set of trade. And the breakout trades, we will be looking for more. Sometimes when we are very very sure, we take double quantities and then try to capture and close this very sure trades. Like for example, when the market reaches here, I'm expecting a strong reversal. I said it just came back super fast, right? Like this was the target. It just came super fast on the downside. Then quickly you are getting 30 points. That's how you reduce the loss. So how to calculate the points? 8,500 divided by 25. How many points that is? Calculator. 8,600, let's keep it, divided by 25, right? So 25 means I have to capture 340 points. So 340 points I need to capture. The moment I capture 340 points, then this position becomes absolutely free of cost. For 25 quantities, you divide by 25, so you get 350 points, let's say. So today I captured 50 points, yesterday I captured 100 points, and before yesterday I captured 100 points. Then this entire position will become free at some point, right? So that's how we try to get free positions. Look at that move. It's really good. Really a good move. I just wish it's 7 not 5. Abhishek, okay. Okay, I think a lot of things are going on. I missed out because I was explaining a lot, and chat I missed it. $693. 695, 10 points away. $698. Last 5 minutes. Doesn't seem to be going there. Yeah, it came back. That's why, but what is good to see, whether it get executed or not is not the problem, but what we have to observe is that our analysis that it should reverse after it touching here. See, this one is touched, this was the target given, it achieved it, right, and then it's returning back, and we placed it at 705, but unfortunately it didn't go. That's another story, but our analysis is holding on true, right? And that's something very important to watch. And thing is that if we have executed that and then it's coming down, it's great, we are making some money. Maybe but I think it will go off today, because at least one side they will like to give. $700. Come on, guys. Come on. Reach 700. Happy with that. Another 5 points. Can't you do? Last 3 minutes of the trade. And it will be fun. I have placed both put order and call order. Both I have placed. 705 is my execution, and 595 is where I have placed my put buy. It has reached 596. Come on. I can modify and take it, not a big deal, 400, 500 rupees of thing, but only thing is that you cannot put a market order. Sometimes it will buy at crazy prices. At the last moment, people will be adjusting. Lot of trap will happen in last 5 minutes. So market order is something very risky. Come on, 598, 596, come on. You can take that. Yeah, 595 is taken. At least one edge is taken, so I'm happy. The other edge, if it is going or not, let's see. So what I am seeing is that the put value has been triggered and then it took, but call value is not going up. For a long time it is staying at 698, 699. So that is erosion. That is erosion. 700, come on. It is at 700. Oops, market stopped. Okay, that's fine. So what happened is that my put did not work out. It closed at 700, but call I have placed at 595 is taken. So that's fine. So I am, because I wanted to really add some quantities at definitive levels. So this is one of the levels. So I added additional quantity here. If there is any sort of moves towards the downside, I'll be booking that. Definitely I'll be booking that. So that's it. The overnight trade position is that. Any questions, guys? Yeah, Abhishek, I made my targets for the day. Day targets are done. The price targets that I have set didn't work out. That's okay. We'll see that tomorrow. Oh, but thanks a lot, guys. Really, I see the poll. 23 people have voted, and then all are in favor of helping the channel reach, and then you guys are already recommending it, and thanks for that. Really appreciate that. So before we sign off, good luck everyone. Tomorrow is going to be a very nice expiry. Let's have some fun, and thanks Vishwanath. Oh, that's nice, Abhishek. Both. Oh, yeah, the Rishiva, thank you so much. You enjoyed the first one. I'm sure we will be meeting more frequently. So join the streams in coming days, and Vishwanath and Jay also please see whenever you get time to join in. But overall, thanks everyone. Really had a wonderful time with you all. We will start in time tomorrow, and take care everyone. Bye.